All right, and we are live. Wow, there's a lot happening in the markets this week. On Wednesday, we have Liberation Day, also dubbed as Tariffs Day. So there's a lot going on because the markets are down this morning, back again in correction territory. So we also have the last day of the month and the last day of the quarter. So we'll look back at what happened here. And then, of course, we'll take a look at our positions and see what's happening there. Anyhow, with that said, welcome to Coffee with Markus and Mark. And today is Monday, March 31st. And in this show, we're going to talk about what's happening in the markets and how we are trading it. And boy, Mark, look at that. I mean, I need to go back on a daily chart here. I mean, if we look at March, it has been a brutal March. I mean, March started kind of here, and I mean, it has just been bad.
It's been a pretty nasty one, Marcus, and the S&P now in correction territory again. For years, it was the markets and investors responding to the F word, the Fed, and now it's the T word and maybe even the R word,
Yeah,
tariff and recession.
tariffs and recession. So, first of all, a correction. When we say correction, it is actually defined as being down at least 10% from the recent or from the highs. And this is where we are down 10% this morning, clawing back right now, but still down 10%. Now, this is not yet a bear market. A bear market is defined as being down 20% from the highs. So, this is where not there yet. However, I mean, the Russell. I mean, this is where we are getting close to potentially a bear market. Let's just see. These were the highs. And where we are this morning is right at around 20%. So the Russell could actually slip into a bear market. S&P and Nasdaq, not yet.
Yeah, and some people might think, well, what's the big deal? And here, regardless of what you think the end goal is, or if there is a benefit down the road at some point, with tariffs, it really comes down to immediate lower growth and higher inflation. There's going to be higher prices, which leads to inflation. There's going to be lower growth because of economic activity. And I saw a CNBC, it was a survey. And so, I mean, this is just a survey, but I think this puts it in perspective. In Q4, the economic growth or expansion was 2.3%. And with this survey, people who responded expect economic expansion to be just 0.3%. So we'll see if that ends up being the case. But that's why the markets are down.
Yeah, and I mean, at first we see that last week, or actually 2 weeks ago, we had a little attempt of a recovery here because it seemed that Trump and also White House officials said, yeah, well, the tariffs, they might not be so severe. There will be lots of exceptions. But then over the weekend, he said, you know what? No, forget about this. I mean, the tariff will start with all countries. And originally, everybody thought that these tariffs would only start with the top 10 or 15 trading partners that have their own import duties on the US goods, these so called reciprocal tariffs. But this is where he said, no. It targets all countries when they're unveiled this week. And I think this is where right now traders are saying, okay, tell us more. What exactly do you mean? How much? Against whom? And what's happening here? And this is where we see uncertainty, and this uncertainty is driving markets lower.
Exactly. And like you mentioned, I mean, Trump's trying to brand it as something positive with it being Liberation Day. It might just be market crash day, though. No, I mean, I think a lot of it's already priced in, but this is the move lower is a direct result of what's going on with tariffs. There's
Yeah, and
no
then we also see
other way to look at it.
the VIX, the fear index, this morning actually spiking to 25, right now pulling back a little bit. But there's definitely fear and uncertainty in the markets. And so this is where you might be wondering, because Trump always said, I want the Fed to lower interest rates. And look at this. I mean, right now we see that the probabilities for the next meeting still that the Fed keeps interest rates unchanged, but it is creeping up a little bit. We see that right now Fed funds traders are saying the Fed might be forced to lower interest rate. Right now, small portion because we're still ways away. I mean, May 7th, this is another, what do we have? 37 days. So quite a while away. But it seems that a few traders think the Fed might be forced to start lowering interest rates.
And the Fed is probably in the trickiest situation that it's been in since 2021, or maybe even 2022, because prices are higher. So you don't want to raise interest rates when prices are higher, and that is the trajectory, right? And this is where we heard the Fed chair say that he believes the tariff impact is transitory, meaning short-lived or soon to change. But right now, with what we're seeing, it's not the ideal time to be raising rates.
Yeah, however, I believe that last week when he made the statement, was it last week or was it 2 weeks ago? Gosh, time flies when you're having fun, right?
2 weeks ago, I think.
2 weeks ago, he kind of prepared everybody and said, well, we know that there will be an impact of the tariffs on inflation, and we believe it will be short-lived. And he unpacked the word transitory again. He pulled it out of the retired bag, put it back on the table, kind of preparing that if they see a weakening in their economy, they might be ready to lower interest rates. And that's what we're seeing here.
Yeah.
But, I mean, doesn't change the fact that right now, for the market's just brutal. I mean, if you look at the months, so let's see where we stand today, last day of the month. The S&P down 7% for the month. The Nasdaq down 9.7% for the month, and the Dow hanging in there only down 5%.
Look at the Dow go.
Yeah. And I mean, this goes all back to what you said, right? I mean, this is where we are right now in a kind of risk off environment. This is where we also see this morning on the heat map who is getting hit today? The growth stocks. Our Magnificent
Yeah.
Seven: Amazon down, Tesla down, Google down, Meta down, Microsoft down, Nvidia down. And let's see what's up. Consumer defensive. Good old Walmart, good old Coca-Cola, Procter and Gamble, and then utilities. And I think we saw it even more this morning when we looked at the pre-market. I mean, pre-market, we already saw it will be a dark red day, and utilities, kind of the safe haven because they're solid dividend payers. They were slightly up here this morning. Everything else looked bright red.
Yeah. And it does look like on a monthly basis, it will be the biggest loss since September of 2022.
So it has been a few years. And 2022, this was the bear market. All
It
right.
was.
Well, shall we hop over to our positions? See what's happening there.
Sure.
All right, let's do this. First of all, WTF, win the fear. I mean, we right now only have one open trade, MDT, and MDT today having a great day. Look at this, up 1.8%. So we entered at 88.63, right now trading at 89.27. So looking good. We might get an exit signal. Talking about exit signal, we did have an exit signal today, ABBV.
Yeah. ABBV exits and worked.
We entered at 203.12, exited at 204.62. Mark, it's up at 210 right now. Should have waited. What do you think?
Gosh darn it. Need to start breaking my rules more.
Right? I mean, that's why we even have the mugs that say, follow your plan. We follow our plan. We're happy. This was another win. So liking this. No other win the fear signal. a little bit surprised by this, Mark, because I thought that we have more pullbacks here. But at this point, again, we're following our rules and we might see another exit tomorrow. And with that, we might be flat when it comes to the win the fear. And I mean, March has been pretty good. I mean, we had a rough February, and March has been a nice recovery for the win the fear strategy.
Yeah, last couple of weeks have been a nice way to trade the WTF. And I know that there were a couple of signals if we disregard the 200-day moving average filter, but that's not something that we want to do. We found that with testing, when there are signals and we're below the 200-day moving average, that those signals, although profitable in the long run, tend to experience greater drawdowns, which means we have to go through bigger losses before we make money, and that's not something that I want to do. So we'll see. Maybe some signals tomorrow.
Yeah. All right. Hopping over here to the wheel strategy. First up, we have our little buddy CSIQ with the higher interest rate and also possible tariffs here down today 5%, dipping below the 950 that has held really, really nicely as a level. So we'll see what happens here over the next few days. Nothing for us to do. I mean, our break even and cost base is way higher. Gotta wait and see when and if this recovers. It's more a matter of when, not if. Halliburton, on the other hand, I mean, we're both having fun with Halliburton, right, Mark?
Yeah, I essentially did a rescue that brought down my cost basis so I can sell calls at some point if it gets back up towards that last swing high. And you've been selling puts, doing a great job.
Yeah, so my cost base is 34.50, my break even 29.51, which means that I collected $5 in premium by just keep selling puts. And right now, this morning, I sold more puts at the 25 level, got 50 cents here. And the idea is that I get a sign that I can also bring down my cost basis and then also further my break even. Right now, HAL Halliburton up 1%, and I'll just keep collecting premium here, and it's going really, really well. At some point, I hope to get a sign at the 25 level. This will bring down my cost basis, and I will be in a very, very similar position that you're in right now because you already completed your rescue mission here.
I did.
IWN, another trade. We are having fun with this one, don't we?
Oh yeah, this has been a nice one. We actually sold puts again on Friday on that drop, taking advantage of that drop. So we sold the 200 today. It would have been a nicer day to sell puts, but even in spite of the maybe day too soon, we got some nice premium there, and we see a nice reversal off of those lows taking shape today.
Yeah. And initially, we sold puts at 217, got a sign there. Right now, selling puts at 200 with the idea of bringing down our cost basis to right here at around 208.50. However, right now, I mean, we already collected what almost $11 per share in premium here. So this is where my my break even already at 206.10. If we do get a sign this week, we will be in an excellent position to sell calls because I do believe that then my break even will be probably very close to around what have you already calculated it? Maybe 202, 203, something like this.
No, because I missed one. There was one week where you were busy, and on Monday you got $2 that I didn't get because it
Oh
just ran
yeah.
away. So we're off by about $2. But I think my break even will be at about 206. So then with that cost basis being at 208.50, if we get we went into the trade, we had the intention and we planned to sell puts at the 200 level. So right
Oh
now
yeah.
it's working out perfectly.
It's working great. I mean, $11 in premium. I mean, I can't complain. This is really good. All right, KSS Colts here. Saw at first a nice recovery after the earnings drop here. Then pulling back a little bit. So today, slightly down, down 0.9%. So pulling back a little bit right now. Nothing for me to do. Here, I haven't collected as much premium just yet. So my cost basis at 1543, my break even at 1409. But this is what, like a dollar 30, a dollar 40 ish, something like this, dollar 35, around this collected in premium. And nothing to do right now. We'll wait and see what happens here. Merck. Merck. This is another fun one where I collected a lot of premium already. Originally assigned at 120, my break even at 113. So collecting also $7 in premium per share. And I'm still interested in flying another rescue mission here. Not another rescue mission, the first rescue mission at 85 with the goal of bringing down my cost basis to around, I believe it's 104, 105 with that. And I would be sitting in a very good position. But for now, I'm just enjoying selling more puts on this one.
Hey, I just enjoyed you saying Merc, 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 Merc at a rapid pace because you sounded like a Muppet.
Maybe I am. I mean, in a world of AI, who knows? All right. UPS, another one where I collected, oh my gosh, so much in premium. As you can see, my cost base is 144, my break even 120. So that's what, like 2450 in premium, bringing down my break even to 119. Still interested, haven't flown any rescue missions here. So I'm very interested right now flying a rescue mission right around this level at around at 112. So we'll see how this works out. If I do fly the rescue mission, I get awfully close to your break even and cost basis because you already flew a rescue mission here.
Yes, and just for clarification, you sold puts back there in February post earnings, but you were never assigned with the rescue mission. So, but you've been able to get a lot of premium with these pullbacks.
Lots of premium. So very happy with this one. And then also another trade that you took last week, MU, because you still have a position open. I'm kind of full because you are not in Colts and you're not in UPS. So therefore,
Yeah,
you
no,
decided to
Merck. I am in
Merck.
UPS,
Yeah,
but not Merck.
Colts and Merck. So you decided to trade MU. Let's talk about this.
Yeah, so I sold the 85 put. Right now it's right there at 85, but I mean, I think this has a real nice range, real nice support around the 85 level. So I sold puts last week, and I think the 85 level's a good one. I
It's a
got
really good one.
65. Yeah, I got 65 cents, and there was more downside, so there's a lot more available right now, but I like the 85 level.
Yeah, I like it a lot. I mean, this is a solid stock. Just today, with Nvidia being down, Broadcom being down, I mean, also being dragged down here. So we'll see. Now, in a moment, we'll take a look at the markets, but we also need to see what is happening here with Bitcoin. Bitcoin still hovering between 80 and 90,000, not making any progress. You would think that after Trump announced a strategic reserve, that there might be a little bit of follow through, but it's just showing we are in a risk off environment.
We are. And gold shows just exactly what investors think about a risk off environment.
Right. I mean, let's just look at this. Gold making just record highs. Look at this. Wow.
Flight to safety.
The flight to safety now trading above 3,100. Jeez.
Yeah, gold up 20% year to date. In March, 9%, 4% for the week, just last week. Yeah. Or,
Yeah.
yeah, last week. Gosh,
All
some
right.
nice moves.
Yeah. Okay, we'll see what the markets are doing. Can they continue their recovery here in just a moment? But before we do, it is the time in the show for our dad jokes. Do you have one for us today?
Kind of. Uh,
Okay.
did you hear the company making yardsticks won't make them any longer?
Oh, Oh. All right, all right, all right. Another sip of coffee. Okay. Good one, good one. All right. I don't know if I really have a joke. I just have more of an observation. And now that you're in the above 50s club too, you know that I've been skydiving, right? And I'm always looking for new adventures. And I see all of these stories of people that are climbing mountains, doing zip lining. And then this morning I realized that I'm just feeling good if I can get my pants on without falling down. It's just,
The-
it just, yep, the age we're in. Anyhow, let's see what's happening here. Moving back to the S&P, we started a recovery here. And look at this. Right now, we are trading at session highs. We are trading higher than the open. Same here in the Nasdaq. Well, it's just slightly below the opening here. And the Dow already turned positive for the day. So a rotation definitely going on from the riskier stocks, the growth stocks in the Nasdaq, to the good old stocks in the Dow.
Looks like it. Looks like it's a little bit of a buy the dip rally, and we'll see what the rest of the week brings. Wednesday, Tea Day, Friday, Jobs Day.
Yeah, Friday, we haven't talked about this. So we do have on the economic front jobs week. I mean, overshadowed right now by all the tariffs talk and the Liberation Day on Wednesday. But then the big one on Friday, we have the jobs report for February, where the unemployment rate remains or is expected to remain steady. The average hourly earnings steady. Non-farm employment change actually moving down a little bit, only 137 after 151 last month. We'll see. But I mean, the big one is Wednesday. What will happen to the tariffs?
And we just have to wait and see.
We just have to wait and see. Hey, by the way, I did a new video that I released on Saturday. If you're watching this here on YouTube right now, I'll put a link in the description so that you can check it out. If you're watching this podcast or listening to the podcast somewhere else, head over to YouTube and you'll see there's a new video. Might want to check it out. I think it's a good one. Anyhow, hope that you enjoyed it. If you did, give us a like. Appreciate that. Feel free to share this with anybody who might benefit from this information that we are giving you. And then we'll be back and letting you know what's happening in the markets next Monday. Until then, have a great rest of your week.
Happy trading, everybody.